Good morning. This is Ken Long from Tortoise Capital. It's morning of November 13th. I'm going to take a look at market health check. And so we're looking at symbol SPY for the S&P 500. Quick look at the screen. The technical indicators I'm going to use are ADX 14, which is the measure of trendiness. We are currently in bull quiet mode based on our market classification scheme. We're going to take a look at price action using candlesticks, and I'm looking at three moving averages. The solid green line is the 10-day moving average, or what we would consider short-term fair value. The thin red line is the 50-day moving average. I like that its slope is positive and that price is better than the 50 and that the 10 is better than the 50. That means we're into a strong trend already. The shaded blue area is the boundary of the 200-day moving average. I like that visual reminder of where the bear market begins. Vertical blue lines mark off 10-day periods, so this is the most recent 10 days, 10 to 20, 20 to 30. Below the price action, I'm looking at Williams percent R10 as a measure of short-term overbought, oversold. Looking at the Williams percent R260 as an annual overbought, oversold. Working from the bottom up now. The shaded green area on the annual indicates overbought on a annual basis, and that can stay overbought for a long period. On the short term, we've seen it overbought most of the time for the last 3 months. Only 1, 2, 3, 4 times has it even gotten back to the midpoint on Williams percent R10. Each time that has been price pulling back to approximately the 10-day moving average. Each time that has been a buy on dip opportunity. So let's take a quick look. Here in late September, there was a buy on dip around 114 possibility. 30 days ago, there was one at 114. Around middle of October, there was one at 117. And now there's one at 120. And in fact, all the major indices are approaching the channeling system's entry levels, which requires a close below minus 80 on Williams percent R. ILF, the Latin America ETF, is the only one that has actually fired, though, for Monday. But we're in the position where this approximately 3% pullback from a high of 123 back down to about 120 is considered normal market noise. It's not till you get past 5% that you start thinking maybe a correction is starting to occur. A correction being anything between 5 to 10% correction in a bull market. So that would take it, a 5 to 10% move would take us back from about 118 to about 111. So I pull back to approximately the 50-day moving average. This is where it would be labeled as an official correction. A correction of 10 to 20% is when you start talking about potential a bearish pullback. Our trigger for that would be the boundary of the 200-day moving average, which is approximately where the market would go into sideways mode. If it goes 2% past that, in other words, below about 110, using today's market, that's where we would see a return to bear. So what we have here is a buy on dip opportunity. We should be looking to add 2 positions in the strongest stocks and strongest sectors, rewarding momentum. When we see those things outperform in the market on a day when the market is up, that would be a signal to pile on with just that amount of information. Now looking at the ADX up on top, the measure of strength of trend, we see this little pullback, which is actually more of a pullback than we've seen in the run-up since early September. If you notice that pullback is greater than any other pullback in this long, strong move that we've had. That's a bit of a concern to me as a potential losing strength in the market. You can see the black line ADX rolling over. The green line is the strength of positive trend, red line strength of negative trend, and you can see how those are starting to converge. This suggests to me that the market is losing steam in this upward move, perhaps because the election is over and fiscal realities are starting to emerge. That's supposition and barely an opinion. So we'll just pay attention to price. So what we have, though, right now is a pullback in a strong bull. Under bull quiet conditions is very favorable to re-enter upon strength. So that would be our strategy going forward. But we're aware of the signposts that indicate this is more than just a normal pullback, and that would be first a violation of 116, and then of about 112. That would be an indication of significant change in market posture. So that's the market health check for this weekend. This is Ken Long from Tortoise Capital, wishing you a safe weekend and good hunting.